Now, the Chinese government have done something massive for China. And one thing they've done right now is to actually start a stimulus package. They've started rolling out a stimulus package. And what I mean by, or what is meant by stimulus package is that they are now basically printing money. Or let's put it that way, or they're now pumping money into the economy. So they're pumping money into the economy to stimulate the economy and to stimulate economic growth so that they can meet their growth target for 2024. Now, what does this mean for you as an everyday person? And what does this mean for you as an investor or as a trader? What this means for you is that now Chinese companies are going to be able to, of course, I'm going to explain it in layman's terms. So basically, the interest rate that it costs to borrow money in China, and of course those who pay mortgages, and how much it costs for banks to be able to, even borrow money from each other, all of those rates have been reduced. So how you look at it is that if let's say for instance, if you have an X amount of money that you are paying on your mortgage, so basically they are cutting off some of the interest rate that you are currently paying on your mortgage. Now, this is for China. In Nigeria here, we're not paying all those mortgages, but I want you to understand certain things. How that affects us here is that if you are a trader here in Nigeria, you have to understand how this is likely to affect you as a trader and how it affects the market that you trade. And if you're someone who is also interested in investing in shares, you have to understand how this also affects, how it's going to affect the stock market in any market all over the world. So basically, how it works is this. The Chinese economy is the second largest in the world. So if there is something being done in China, the effect of that is going to spill over into the US market. That is just natural. And of course, when something happens in Europe, it spills over into the US market. And of course, when US does one thing, everyone else is affected. It goes around. It just, it goes on like that globally. So what that means is that with the money being pumped into the economy, it's simply saying that there is more money for corporations to do business. There is more money for corporations to, expand the economy. And of course, you have to understand that China is also the manufacturing capital of the world. So lots and lots of companies who use inputs, who, have raw materials, who import raw materials and all of these things to, aid in production process, they are going to have a lot of money to be able to do those things. And what are some of the core raw materials that they use? Of course, you're going to see mining companies. Of course, you're going to see that, their share prices are going to go up. And also, when you're looking at items like copper, for instance, Australia is the biggest, exporter of copper in the world, and China is Australia's biggest trading partner. So China imports most of the copper, from Australia. So what this is ultimately going to mean is that China is going to be spending a lot of money, to purchase all of this copper from Australia. And ultimately, the Australian dollar is going to get strong. And if the Australian dollar getting strong, we're going to be looking at buying assets like, AUD, USD, and of course, and we're going to be looking at the Aussie 200 as well, AUS 200 as well. We're going to be looking at, buying that. So it is likely to have a global effect in the market. And also, they have also lowered interest rates for institutional investors to actually take up loans and use those money to actually, invest in the stock market. So naturally, what this means is that the government is basically throwing money at assets. So it means assets, the price of assets are going to go up. And how this also affects you is that it affects Bitcoin as well. For those of you who trade Bitcoin, the price of Bitcoin is likely to go up following this type of measure as well. The reason that is likely to happen is because when you have so much money being printed, naturally the value of fiat currency, naira, all of these things, dollar, Chinese yuan, all of them, they are fiat currency. With the pumping in of all this money into the market, the fiat currencies are going to lose value. And what does crypto do? When the fiat currency is losing all of this value, you start to see Bitcoin, soak up the remaining value, because there can only be 21 million units of Bitcoin, mined at any given point in time. So there is a limit to how much Bitcoin can be mined. But then in fiat, there is no limit. They can print it to the tune of billions and billions, and nobody really cares about that. But now that is going to mean that with that amount of money being printed and thrown into the economy, the price of Bitcoin has to go up as well, because of course the fiat currency is being diluted. The value of the fiat currency is being diluted as well. So looking at the stock market as well, it means they're going to take money, throw it to assets, and asset prices are going to go up. You're going to see price of assets going up. You're going to see share prices of companies jump on all of this. So this is basically preparing the ground or laying the groundwork for a reverse crash. So the market is going to actually take off to the upside. And the last time we saw this type of heavy measure, I think in 2008, when there was a financial crisis, that the US government threw in $750 billion into the market to stabilize the economy. Of course, when they threw that money in, the overall thing that happened was that following that, of course, there was huge inflation, and, that's just what it is. If you throw so much money into the economy, it's bound to lead to inflation. And of course, all of this inflation they are seeing, that's why they had to hold interest rates very high, over an extended period of time, so that they could, curb some of those inflation, that, they created from throwing all that money into the economy. So this opportunity as well is going to show you that price of assets are going to go up, and you need to be knowing what to buy this period. But also, one more thing that happens is that it is also going to create bubbles within the market. I mean, you're going to see some asset prices, that don't even have much value, but then they are very, very expensive. Eventually, all those assets, all those bubbles are going to burst in the market, and you're going to see the market, tank as well. So when you're getting into the market, or you're investing in any shares, or you're buying any shares, you need to also understand how and when to time your exit in the market. It's not enough to you know when to enter. You have to also know when you are getting out. This is why you need technical analysis. This is why you need to actually understand how to trade, because with this, you're able to look at the market, know when to get in, and of course, you also know when to get out of the market. So that's really how it works, and that's really what's up right now with China. So China is leading the way with the stimulus package, and of course, over the next 6 months to maybe 1 year, we are going to see them roll out more of these things just to stabilize their economy and just stimulate more growth within the economy overall. And if this is going to happen, it means that we're likely to be seeing asset prices go up. We're likely to be seeing the S&P 500, NASDAQ, all of these companies. We're going to be seeing all of them go up. And if you're a trader or an investor, you should be looking for the dips to buy, of course, pullbacks to buy, and all of these things. And you just ride the bullish wave. That's just how it works in these kind of market conditions. So I mean, if you have any questions, please leave that in the comments. If you find this video on Facebook, Instagram, YouTube, wherever you find this video, please engage. And of course, we bring this type of value and information from time to time when the market provides them. So I really wish you good luck and good trading, and whatever you're up to, I hope it's profitable. Cheers.